Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Thursday, May 16th. Markets continue to grind higher. Dow up 60, S&P up 8.5, Nasdaq up almost 9, gold down 33, which we had a nice little call during the beginning of the week to short gold below the 200-week moving average on a closing base of 1444, which we'll talk about in a moment when we get to charts. And of course, the dollar up 16. Well, the markets continue to grind higher. In 25 years doing this, I've never seen the market's just grinding higher relentlessly on an uptrend, breaking out of new highs every day I think now it's up 18 or 17 of 20 days. Nobody has seen it, and we've all talked about it, and all the pundits on CNBC talks about it. The bottom line is, how do we make money from it, and what do we do to preserve capital in this uncertainty time of the markets, because the markets are grinding higher. We are seeing some red flags that we've been seeing really throughout the course of this 2013, and the markets totally have ignored it. We have worldwide intervention from central banks around the world intervening with their currency, printing dollars, flooding the market with liquidity, and that's what you have. So you have the naysayers shorting the market, looking for tops, and the buyers continue to push these short sellers to cover, fueling more upside. And that's really what happens here. But I will say that this is false buying, meaning that this is not real buying. This is buying based on central bank intervention. No matter how it is, we want to make money off it, right? So we are looking for, what am I looking for? Well, we're looking for a top in the market. We're not looking to call a top, but we're looking for some signs. Maybe, hey, the market is starting to wane a little bit. But ultimately, right, whether it be an indicator or certain other markets diverging from the S&P, we still need the S&P to make lower lows and lower highs, and that is what pays us price. So that is what we continue to look for. In the meantime, we will continue to look for red flags and see what happens in a market. And if you are day trading, you want to just take the best trade setups. And if something doesn't make sense, step aside. You don't need to be in the market every day. And if you're position trading yourself or swing trading, tighten up stops or buy protection. The videos here that we produce are to make sure that we try to keep the trader on the right side of the trade, not being too aggressive or being aggressive when need to be aggressive. Okay, so what do we have today? We have some econ data. We have consumer price index for April. Coming out at 8:30. We do have housing starts for April as well, coming out at 8:30, and of course the weekly jobless claims coming out at 8:30. 10 o'clock we have Philly Fed Index for May, so that's going to be the first indicator for May to see how is May doing. So that could really be a pretty decent number. So you want to really keep an eye on that and kind of watch out if you're long or short going into 10 o'clock, because that really could be a market mover, because it's the first number for May to be released. So that's something really that we want to pay attention to. All right, so now let's get into our indicator. And I just want to show you how we were making lower lows and lower highs while the markets were running higher. Market dipped lower. We dipped lower here on that gold breaking down, and that's what I want to talk about as well. And all of a sudden, we have just rallied right now, taking out the highs and in extreme overbought conditions. 91, almost 91.5%. Of stocks above the 50-day moving average. Now, if I go to the stocks above the 200-day moving average, this is actually crazy. We can't even get any more higher than this. I would believe maybe another couple of points higher. But we are way, way above, deeply overbought. And again, overbought is not a sell signal. We just want to make sure, keep an eye on things, because this is another big reading that stocks just literally have gone parabolic and have really stretched. They're really stretched. And what's going to happen? You're going to have a revision to the mean, right? It's going to happen. We just don't know the timing of it. And the thing is, what scares me is that when everybody's buying at these levels, thinking that the S&P is going to go to 1,800, Dow 17,000 without a pullback, it's going to be very scary for those people that are buying at these levels. So you got to be really careful with that. Okay, so we have copper. And here's, again, the red flag. We have copper that markets have rallied all week, and copper has sold off, diverging from what the S&P is doing. Okay, so that's another big warning sign. Gold. Now, we had gold on that big sell-off here several weeks back. Markets took a hit. And reason being is the market participants who had gotten margin calls in gold have to sell their So they're good assets to pay for that. So that's what's going to happen if this market, if gold continues to sell off. Now, gold is down, I think $20 tonight. Again, additionally from this is the end of day from yesterday. So gold is actually much lower. So we really need to pay attention what gold's going to be doing, and of course what the dollar does. Right now, the dollar has been rallying and has been really just taking off. We took out this big bull flag here, right? We had the little one. We took out, we back tested this, and then now we have this bigger bull flag, right? Flagpole flag, and now we have broken out of resistance. So I do think the market, I think the dollar is a little stretched, so maybe we come in a little bit, flag again on a smaller flag, and then take out the highs. But this will fuel selling pressure in the commodity sector, right? And eventually equities. Now, we do have that inversely correlated effect. Right now, the dollar is rallying with equities, and that could change. We talked about that, right? When there's a worldwide liquidity and people want to come and invest their money in the United States, well, you got to take that currency that they're in and convert it into dollars. So the markets can rally with the dollar, but right now I don't think that. I think that we still have an inversely correlated effect, but we need to really monitor that going forward. Okay, and then we have FXE. Now the euro taking a hit, right? This is the FXE, the euro currency. Now the euro, another inversely correlated is that if the euro starts to sell off, usually equities risk off. So we need to really monitor this, guys, in the coming days. Now, don't forget, it is options expiration. That could keep the markets afloat here for a couple days, and then we really need to see what happens going into next week, okay? But I just want to show you some charts now. Monthly chart of the SPY. Usually I give you the bigger picture on Monday, but I just want to show you where we are. We are at the upper end of this long-term uptrend line. We hit that. Now, can we go higher? Of course we can. The markets are crazy, and it'll do what it wants. However, we need to be aware that we are at the upper end of this trend line on a monthly chart. Look at the overbought reading, 97 on a monthly chart. Absolutely insane. Weekly chart, same thing. We're at 93. Look at the volume just tapered off on this big move up. Now, we did have a couple of good, decent days of volume during the day, but weekly volume has just literally tapered off. But look at this. Running up higher at the upper end of Bollinger Bands, way overbought. Now we have 4 weeks of constant buying in the spiders. So keep an eye on it, guys. We are overbought, but again, overbought isn't a sell signal, but we just want to be aware of what we're looking at. 96 in the stochastic spider daily chart. As you can see here, we had tapered off in volume, but we did have a couple of good days in volume here, a little higher than, well, really average, but better than the last several days. So the last 2 days weren't as bad as far as volume is concerned. 30-minute chart, as you can see here, look at what's happening. We gap up, sideways consolidation, gap up, sideways consolidation, another pop up on the 30-minute chart. So a lot of individual stocks have either made their move or makes their move in the morning early on the opening and stays pretty much flat to slightly up and or down during the day. So very frustrating for the day trader if you're not right on top of a stock, and because you can easily miss the move. Here's the IWMs again, just chugging along here. Here's one of our leaders doing well again, 96 in the reading. Back in the day, and I mean back in the day, meaning probably last year, when we had 96, 95 reading on our indicators, we would look to short the stock. But now you just can't. It's impossible. There's so much buying going on in the indexes is pushing everything up. You just don't want to get in front of a freight train. But you want to be aware, because when the markets do turn over, they turn over rather quickly, and you could literally be just missing it. Just like gold. We talked about gold several days ago. Not even. Beginning of the week. It's only Thursday, and if you weren't in gold 2 days ago, you missed the move already. So that's something else that we wanted to talk about as well. Okay, so now we have the diamonds. Same thing with the diamonds here. As you can see, big move up, and it's something that I want to really be paying attention to. It's not that we're rallying so hard here, but again, if the other indexes are moving higher, the diamonds are going to move higher, meaning the Dow Jones as well. And we have Goldman Sachs, and I mentioned this here, said we had this bull flag. This was, I think, on Monday. I said, guys, we did break out of bearish configuration here, bearish symmetry. We're making lower lows, lower highs. We did break out of it. We bull flagged, back tested the upper trend line. I said this thing could easily explode higher coming out of a bull flag. 2 days ago it did, and look what happened yesterday. Follow through from the previous day. So good analysis here in Goldman Sachs. And look at XLF. Boom, broke right out of it. XLF just literally just exploded to the upside. Again, in the bullish camp, you have everything chugging along. Aside from being really overbought, like I've been mentioning in the last, several months, actually, the long-term perspective is quite good in the markets. It's just that you can't, the markets continue to grind higher without a 2% pullback. Not that I'm saying it, but you could easily get a 20% pullback or big correction here. Now, I'm not saying that is going to happen. I'm just saying that it could, because everybody's buying up at these levels, thinking that the markets are not coming back. So just very scary to see something like that. Here's Apple. Apple broke down from the bull flag pattern, and I said, watch Apple here, looking okay. If we can break out of this bull flag, now it's a different story. Now this is the line in the sand here. 418 has to hold. If 418 does not hold, we're going to easily test the 400 and then downside target. Don't forget here, all we did here is did a head test of this head and shoulders pattern here. So this is still quite valid. We need to break this neckline of 418. 418 breaks, you're going to see the 360, 370-ish area probably sometime in the summer before it starts to really starts to really move higher. So keep an eye on Apple the next couple of days. Highly influential on the options week. So just keep that in mind as well. Okay, and then of course lastly is SMH. Just wanted to show you a little bit of a pullback, but now starting to chug along higher. Semiconductors, and of course Q's doing really, really well despite Apple's weakness yesterday. Q's managed to ended up with a gain. All right, guys. Gold, watch the euro. Of course, watch the 5 indexes that we follow for some intraday divergence. That could be a big hamper. We are at uncharted territory. We are extreme highs. We are extremely overbought. Everything is reading for a market to pull down, but we're not looking to put ourselves at that type of risk. We want to let the markets break down, and then, of course, make maybe a little bit of a dead cat bounce before we really enter short, or to even say that we may have a tradable top. Right now, all we have is a market continuing to grind higher on uncharted territory, so we want to just continue with the trend, play the pullbacks if you find them, and or relative weakness if you can do it as far as day trades. And again, if you're long-term, you're position trading, then I would just literally just tighten up stops here, and then just kind of right along this wave that we're in. All right, guys, have a great day, and we'll speak to you tomorrow. Take care.